Welcome back to Investing Talk Podcast. Today we're tackling a really fascinating company, one that's seen absolutely massive stock movement recently, but, well, its whole business model requires some serious long-term vision. We're talking about AST SpaceMobile. They're building this global space-based cellular network aiming to connect directly to just, regular mobile phones, standard ones.
Exactly. And that really brings us to the core question everyone's asking. Is AST SpaceMobile a good time to buy now? I mean, this is a U.S.-listed company, pretty much the only pure play focused on this direct-to-device satellite cellular idea. So our task today is to really dig into that tension, right, between the incredible stock run we've seen, that momentum, and the actual underlying financials. Is it hype, or is something fundamental shifting?
Right, that's the tightrope walk, isn't it?
Yeah.
Hype versus execution reality, that's exactly what we need to unpack. Before we jump into the numbers, though, please do subscribe, like the show, and comment below. We love hearing from you. And hey, if there's a specific company you want us to analyze in a future show, definitely let us know in the comments.
Okay, so
let's start with that momentum story, because honestly, you just can't ignore the price action here. I mean, you look at the chart, it's just vertical. The stock surged, 133.6% in just the last month?
Yeah, it's incredible.
And year to date, over 340%, pullback 3 years. And it's a mind-boggling 12,299% gain. That's not just noise. That signals some really powerful sustained buying, doesn't it?
Oh, absolutely. It signals a pretty profound shift in how investors are viewing this company over the last year, from, deep skepticism to some real conviction. If you look at the trading, say, as of mid-October 2025, the stock's been bouncing around in a high range between maybe $60 and $88. But the key thing for anyone watching closely is that major support seems to have firmed up around $65. That level's been tested. It's held, suggesting a base for this current higher level.
But still, 12,299% in 3 years?
Yeah.
That screams hype cycle, right? Maybe just rumors fueling it. What's the concrete technical evidence this isn't just euphoria?
Well, that's a fair question. But the technicals do seem to back it up, surprisingly. The overall structure, technically speaking, is strongly bullish. All the key moving averages, the 20-day, 60-day, 200-day, they're all sloping upwards pretty aggressively.
Okay.
That confirms the underlying trend is strong. And then there's this really interesting point about the short interest. It was reporting near 29% in early October.
Wait, so high short interest, lots of people betting against it. How is that a positive sign here?
Because the stock is still climbing despite all those negative bets. It suggests the buyers, the bulls, are actually absorbing all that selling pressure. The constructive volatility we've seen recently, it means buyers are currently winning that fight. Plus, eventually those shorts have to cover their positions, which can add more buying pressure, especially if there's good news. It kind of creates a spring-loaded floor.
Got it. And this buying pressure, it's not just retail traders jumping on the bandwagon, is it? We saw some big institutional moves, too. Tell us about those 13F filings.
Yes, exactly. When you look at the institutional side, those quarterly 13F filings, we saw heavy hitters like BlackRock, Vanguard, State Street. They all filed new or significantly bigger positions between August and September 2025.
Why?
Their combined holdings jumped 9% just in that quarter. When the so-called smart money starts putting serious capital to work like that, it tends to, validate the thesis a bit more for others.
And it sounds like that confidence isn't just external. It starts right at the top with the insiders.
It does, yeah. We also track insider buying and selling through Form 4 filings, and in Q3 2025, we saw net purchases by insiders, around 42,000 shares bought by them on balance. When management, the people who know the most about the operational realities and timelines, are buying their own stock, well, that's often seen as one of the strongest possible signals about their belief in the long-term plan, even with all the risks.
Okay, that makes sense. Which brings us neatly to that financial tightrope. The buying momentum is clear, but it's all based on the assumption they can keep funding this massive project. So let's pivot to the fundamentals. How far out are we really looking at profitability? And what are investors actually buying today?
Well, they're buying growth, massive, almost vertical projected growth in the fairly near future. This company is pouring money in now to unlock what they see as a gigantic future market. Analysts are projecting average revenue around $60 million for this full year 2025. That's likely from initial deployments, partnership milestones maybe. But then look at 2026. That number is expected to jump dramatically to about $266 million.
Whoa, okay. That is explosive growth. If those projections hold up, we're talking growth rates over 1,200% in 2025, then another 340% in 2026. You don't see numbers like that very often.
You really don't, not outside potentially disruptive early stage tech. It signals, market expansion and the commercial rollout really picking up steam, hopefully as planned.
Yep.
However, you absolutely have to balance that potential boom with the current financial picture. Profit margins are, well, deeply negative right now. They're investing so heavily in R&D, manufacturing, launching those big Bluebird satellites.
Right.
So near-term losses are definitely forecasted. EPS expected around negative $1.07 in 2025, improving, but still negative, maybe minus $1.72 in 2026.
And this gets to the heart of it, right? The cash burn. Building a satellite constellation isn't cheap. They're burning through cash. What was the number? Negative free cash flow of nearly $500 million trailing 12 months.
Yeah, negative $483.4 million. It's substantial.
So if the free cash flow, the actual cash generated, doesn't turn positive until 2028, you said.
Yeah.
Isn't this basically like buying a lottery ticket that might pay off in 3 years? What keeps people invested that long?
That is the critical timeline, and you hit the nail on the head. The consensus among analysts is that the financial turnaround, when FCF flips positive, doesn't happen until 2028. Projections show it hitting maybe $241.5 million positive then, and rising sharply after that. What keeps investors engaged, presumably, is the sheer scale of the opportunity if they pull it off. The potential for revenue once it's operational is just vast. But you're right, investors today are absolutely buying a story that relies on flawless execution for the next 3 years before the financials truly validate it. Success in operations during this period is everything.
Okay, so with that kind of cash burn, the competitive moat becomes absolutely crucial. If they're spending hundreds of millions to get to 2028, what stops a giant telecom or another satellite player from just jumping in and stealing their thunder right before they cross the finish line? What's their protection?
It seems to be a fortress built on two main things. There's specific technology and strategic partnerships. First, the tech. AST SpaceMobile has this unique, patented system that lets standard, off-the-shelf phones connect directly to their Bluebird satellites.
Let's pause there. Unmodified phones. That's the big differentiator, isn't it?
Exactly. That's the key. Unlike some potential competitors who might need special chips or antennas built into phones, their tech is designed to work with the phone you already have, your iPhone, your Android, connecting from literally anywhere. And that technology is apparently protected by a huge number of patents, over 2,400 patents and applications filed.
Wow.
That level of intellectual property creates a significant barrier. It makes it technically and legally very difficult for someone else to just copy their approach quickly.
Okay, IP is one wall. What about the partnerships? You mentioned they're more than just friendly agreements.
Absolutely. The deals they have with global giants like AT&T, Vodafone, Rakuten, they do a couple of critical things. First, they de-risk adoption. These telcos are essentially guaranteeing demand once the service is live. Second, many include exclusivity clauses for certain regions. For instance, AT&T expanded its partnership back in September 2025, specifically setting things up for the long-term commercial rollout.
So AT&T isn't just testing it, they're integrating it.
That seems to be the plan. They're locking in spectrum access, navigating the regulatory hurdles. These partnerships basically line up the customers for the moment the switch is flipped.
Okay, so they have a moat, but they still need to survive that 3-year journey to positive cash flow. Let's double check the financial health. The balance sheet needs to be solid enough to handle all this spending, right?
It does, and it actually looks surprisingly strong for a company burning cash at this rate. As of the end of June 2025, their balance sheet showed decent runway. They had about $342.6 million in cash and equivalents. Compare that to total liabilities of around $184.7 million.
Look, so more cash than debt right now. And what about near-term liquidity? Can they cover their immediate bills? What's the current ratio look like?
The current ratio, which basically compares short-term assets to short-term liabilities, was above 1.85. Simply put, that means they had about $1.85 in easily accessible assets for every $1 they owed in the near term. That shows pretty strong liquidity, giving them a buffer to fund those satellite launches without an immediate need to raise more cash, hopefully.
All right, so the tech mode is there, the partnerships are lining up, the cash position seems okay for now. If someone's thinking about starting a position now or even trading it short-term, they need catalysts. What are the key things to watch for in the next, say, 3 months? What could really move the needle?
Yeah, there's actually a pretty packed schedule of potential short-term catalysts coming up, 0 to 3 months out. First, you've got the next earnings report. Q3 2025, expected around November 12th. Investors won't just look at the loss per share. They'll be watching for revenue acceleration, even small amounts year over year, and critically, updates on hitting operational milestones. Second, visible progress. More Bluebird satellite launches are scheduled for Q4 2025. Plus, any news on regulatory approvals or spectrum allocation, those are tangible signs the plan is on track.
And the third one, often the biggest stock mover, new partnership announcements.
Precisely. There's strong anticipation, based on hints in recent company updates, that new partnership deals could be announced by December 2025. These kinds of deals often have a bigger immediate impact than the quarterly numbers themselves. And speaking of buzz, the rumor mill is definitely active. Talk about potentially finalizing a big multi-country deal in major emerging markets that would massively expand their potential customer base.
Right, I heard that one. And also that slightly more speculative rumor about a possible tech tie-up with maybe Alphabet Google for satellite-to-cloud integration.
Exactly. If either of those rumors turns into reality, it could really shift the narrative around the stock quite dramatically.
But despite all this potential, the market's still a bit cautious, right? You said the analyst consensus is hold?
It is technically hold on average, but if you dig into that, about a third are buy and 17% are strong buy. It's split. And interestingly, some valuation models suggest the stock is trading at a significant discount to its perceived fair value, maybe over 50% discount. That big gap, that's the market pricing in significant execution risk. It's basically saying, great idea, fantastic potential, but you absolutely have to prove you can build it and make it work on schedule.
Well, this circles us back perfectly to the risks. If execution is the big worry, what's the number one thing potential investors need to keep a close eye on over the next year or so?
It really is just that. Execution risk. Number one, by far. This isn't just software development. It's launching rockets, deploying complex hardware in space, securing permits in dozens of countries. Any significant delays in satellite launches, any major regulatory roadblocks, or if the commercial service rolls out slower than expected, that could really hurt the stock price in the interim. Now, the solid balance sheet helps ease immediate funding worries, but yeah, this is a story where hitting milestones precisely on time is absolutely critical. No room for error, really.
Okay, so pulling it all together, what does this mean for someone looking at the stock right now, weighing the fundamental story, the technical picture, the upcoming catalysts? What's the overall take?
Well, when you weigh the strong technical momentum we discussed, the unique tech advantage, that incredible growth profile, even factoring in that very real execution risk, our overall view leans strongly bullish, maybe an 8.5 out of 10 rating on the thesis strength.
And the thinking there is it works for different types of investors.
Yeah, potentially. It seems suited for maybe short-term traders trying to play the upcoming news flow earnings partnerships in Q4, but also for long-term investors willing to ride out the volatility to capture that huge secular growth story if, and it's a big if, they achieve commercial scale from 2026 onwards. You're kind of investing in the infrastructure build-out today, like buying railroad stock way back when, steep upfront cost and risk, but the potential payoff from controlling that future connectivity could be immense.
A long-term infrastructure play based on unique tech backed by major industry players. That's a powerful combo if they execute.
It is. It provides a strong argument for potentially weathering the inevitable bumps along the way.
All right, let's wrap up with a final thought for everyone listening. Given the, highly innovative patented technology we've talked about and seeing that intense interest from big institutions, how much of the Kameni stock price might already be reflecting whispers or possibilities of a bigger strategic move, maybe a deeper alliance, or even an early takeover offer from a major telecom like AT&T or Vodafone? Perhaps they decide owning it is better than just partnering. Something to definitely think about as you watch those important Q4 satellite launches.